Good day to all Indiresh TV listeners and viewers. Tecnotree publishes H1 results today, and on this video we have CEO Padma Ravichander and CFO Indiresh Vivekananda as guests. Welcome.
Thank you.
Thank you, Ronnie. Good morning.
So we can start with the traditional question. What were the highlights of Tecnotree's H1?
Overall, I think we demonstrated consistent performance in very tough market conditions. Our net sales increased 10% to 34.8 million euros this first half. This growth was obviously fueled by new orders that came to us from both existing and new customers in Middle East and Africa. But more importantly, we also witnessed growth in our AI/ML business in North America region, which helped us. Our operating results also grew 37.3% to 9.8 million euros as compared to 7.1 million last year first half. And I would say this improvement was mainly due to a product-first culture, improved productization across the company in our R&D investments, where we do once and deliver many times, better margins, and focus on cost optimization. Our net result also increased by 11% to 5.5 million, and this was achieved despite the currency devaluation pressures we faced in Nigeria, and also despite the stronger euro against the US dollars, which, and I think the main reason why we had a better net result is because we improved the predictability of our delivery through more productization and configuration of our stack and our technologies, and greater optimization to contain costs. So overall, I think a very good performance by the company in H1.
The growth level slowed down a little bit to what we've seen from Tecnotree in the past quarters. How much was it due to slowing down of demand, and how much was it due to currencies?
So Indiresh, do you want to answer that?
I can take that. Roni, you are right. We are a global company, and we are subject to the foreign exchange fluctuations across the world in multi-currencies. There was a significant impact on our revenue, and to some extent it also benefited in costs as well. We had to revalue all of our assets and liabilities due to these consistent changes in the foreign currency. But I can say that in spite of all these things, we are able to achieve good numbers, and all these the exchange losses or gains have already been taken care in our books, and these results are after considering all those losses and gains.
All right. The value of Nigerian Nairan dropped significantly in Q2 after the central bank allowed it to float freely. So what type of an effect did it have on Tecnotree's numbers, and does it have any effect in the future to, for example, cash collection from Nigeria?
Probably, Padma, I can take this one. So, Roni, as I explained, we deal with multiple currencies across the world. Yes, Nigeria devalued its currency by more than 25% in the last quarter. This has both the short-term and long-term impacts. In the short term, we did continue to feel the impact on our net income. As I said, that the devaluation of that did hurt us, and we had to take a hit of that, which we have done it. However, a free convertible Naira in a way also will have a positive impact on the Tecnotree in the long term. One, it reduces my repatriation cost, and this also speeds up my cash collection locally. This will also, to some extent, help us to expand our business in that country. Further, I want to make one factor clear, is that all our business contracts are always denominated either on USD and Euro, which minimizes such huge fluctuations in the currencies. The short-term necessary provisions, whatever we had to make, we have made it to cover them. Hope I'm able to answer your question.
Yeah, this answered it very well. How has the cost savings program you implemented on Q2 developed, and what concrete actions have you taken?
So throughout the year, we have had a significant focus on costs. As I said, we have administered digitization, automation in all business units. And during this quarter, you've seen that we have had a stronger EBIT, mainly because of these measures. We have increased automation and digitization and configurability of our product stack with a product-led investment approach throughout the company. And through the use of these automations and configuration of the stack itself, we have expedited the delivery capability to our customers, making it more predictable and faster. And in that process, we have been able to retire some of the order backlog faster, which definitely increases revenue. The full benefit of our cost in control initiatives, I think, will be more visible to the latter part of this year, particularly maybe in Q4.
Could you give us an update on how your investments to AI and machine learning have advanced? Should we expect any new product launches, and have you managed to win new customers with your AI offering?
Clearly, we have been steadily growing the AI/ML presence across Tecnotree product stack. Just to give you a little bit of an overview about AI itself, Ronnie, AI is attracting a lot of investments from very large companies, some of the largest companies in the technology sector today. With the global AI market valued at $500 billion by 2023, AI investments have been rallying on Wall Street, with the top 7 AI investment companies, the likes of Microsoft and Meta and Alphabet. Together, they command more market value than the S&P 500 stocks combined. We at Tecnotree obviously sensed this market condition, understood the requirement for AI/ML in our telecom customers as well as on our digital stack, and we have been continuously making good investments past the acquisition of Cognitive Scales in R&D to integrate the AI/ML capability, and it's definitely showing a positive impact. Our existing customers in Latin America, like Claro and MTN, new customers, new tier 1 logos are looking at our strategic investments in AI/ML and are extremely attracted by the kind of investments we are making and how it is improving the productivity and the predictability of experiences that we are able to bring for our customer 360 and our customer interactions on the platform. In fact, even industry analysts like TM Forum have recognized the work that we have done in terms of bringing an integrated AI/ML experience to our CRM products. And they believe that we will be creating new levels of maturity in the overall customer experience across the telecom industry, and are working closely with Tecnotree to bring out the new maturity model. In the upcoming quarters, we will have to make more investments in AI/ML beyond the customer experience. Our profile of one and the 114 patents we have in AI/ML will be felt right across the stack. And I'm very positive that it would have a very important and positive impact in the upcoming 2024 on our stack and for our customers going forward.
All right, so interesting times ahead from that perspective. The overall economic environment seems to be getting worse and demand outlook has decreased in many industries. Do you see any slowing down of your demand outlook at the moment?
I completely agree that the economic outlook is very concerning. Many operators are being very cautious about large digital transformation and CapEx expansion projects or CapEx spend projects. So in Tecnotree, we've been very careful and we have pivoted towards cross-selling and upselling other experiences on our digital stack that will help our customers, telecom operators, monetize their capabilities beyond connectivity by giving them new models which are annual recurring revenue, which are lower immediate cash outlays because they would be subscription-based services and they would be more an OPEX-oriented investment. This is another area where we are continuing to invest in our R&D to make the stack more modular, bite-sized chunks where operators can consume on a pay-as-you-go model some of our services and capabilities. Overall, I would say we are cautiously optimistic given the fact that we also work in emerging growth markets. Our customers continue to invest in new business, new technology, particularly to get ready for 5G capability and cloud capability. And hence, we hope that would balance our performance and not affect us too adversely.
You added in your outlook that you expect significant impact from cost inflation and margin erosion in H2 of 2023. Could you open up what factors are driving this specifically in H2, given that you have done cost savings as well?
Padma, I can answer. Yeah, I'll answer the initial part of it. Rani, yes, cost pressures are high, especially in the geographies we work. The inflation continues to be on the high. To some extent, we are able to balance it out because most of the currencies where these inflations are very high also tend to get highly devalued. So to some extent, that offsets my losses. But however, we are taking different steps to ensure that the currency losses are stopped. There is a better treasury operations. All these things contributed a lot to improving our margins in the first half of the year. That is reflected in the higher EBIT. Maybe Padma, you want to add something?
Yeah, and I've said this before, and we are a global company and we are expanding our footprint globally. We tend to hire in low cost markets. We tend to work closer to our customers in terms of delivery. We have also automated our product stack so that we can deploy zero touch in many locations where we do not have to have our people travel. So the combination of being very cautious and balanced about our R&D investments and in the way that we productize the stack definitely has been focused on ensuring that cost containment is central to our theme.
A big event for you in the summer was that you were able to collect 43 million euros with the convertible debentures. Are you able to comment your plans on how you're going to allocate these funds more than previously? And should we expect M&A already this year?
Thank you for that question. I'm sure it's a very important key question for many of our investors. Clearly, this was a very strategic move, and it is the investments will expand our growth story and our strategy to become far more global and go after emerged markets as well. More deliberately, I would say it's a three-pronged approach in terms of how we want to look at this investment. The first is corporate and financial focus. We have accrued some debt as part of the AI/ML cognitive scale acquisition, and we will tend to retire that debt and improve the operational efficiency of the investment. And then we will look at a pipeline of M&A. We already have a pipeline of M&A plans, which aligns with the strategy for growth, very similar to the investment in AI/ML, which is already fetching good returns and opening doors in North America for us. So we will continue to evaluate these options and hope to conclude and announce M&A activities as and when they conclude. The second focus will be investments in product R&D, and that will be very strategic in nature to continue to develop the product stack for 5G and cloud readiness and monetization beyond connectivity, such as integrating IoT services and other vertical capability on our stack so that our customers can offer services through their partner network to the enterprise. Really, the focus right now in connectivity is not the consumer, it's the enterprise. And we have built a stack, I honestly believe, which really services the enterprise capability that the telco wants to present to the market. And finally, the third area of focus is definitely business expansion and growth in newer markets. So we will focus on expanding into new markets to acquire new customers and possibly new adjacent verticals in healthcare and fintech and such areas where IoT and social commerce will be important areas of expansion as well.
All right. Thank you for your answers, and I hope you all the best for the rest of the year.
Thank you, Ronnie.
Thank you.